The election is over. What are the implications? We have thoughts. Yeah, no doubt. And I think you made a good point in the middle of that. The whole thing was a very good
Oh,
point.
thank you. Yeah.
But in the middle, you said, "Hey,
I surprised you made a good point.
yeah."
Yeah, I mean, and it's interesting because I think we've discussed this in a lot of different situations, circumstances, which is the market will trend upward. Let's say just it's trending upward. The trade will start to consolidate, right? So you get these big swings, get narrower swings. The market's trying to decide what it's going to do, and there's a deciding factor in there somewhere that's going to either release the energy to the upside or the downside, right? So this time, the sweeping election result broke the markets out to the upside, and to a degree that I think everybody was surprised by, right? Like I would have thought, 500, maybe 1,000. I didn't expect it was going to open 1,500 and stay there. The Dow would stay up at 1,500 points for pretty much the whole day, and then following, Thursday, Friday, no real market activity. I would have expected some level of profit taking. Just to wait the weekend out and see if some result changed or there was something shifted over the weekend. But the market's Dow I looked at this morning was up 450 points already. So that's a good sign for the stock market, I would say. Again, as long as client situations haven't changed, their perspective, their income need and all the time horizon and risk tolerance things, risk appetite that we look for hasn't shifted. We keep the base portfolio the same and we go get excited with a smaller chunk of money to seek alpha or seek return. I think it's a fool's errand after, again, years of doing this to chase a market that reacts to any circumstance, whether it's, 9/11 or the financial crisis, COVID, an election result, whatever it might be. It really does seem to me to be head down, stay the course, add money if the market's going down, sweep profits and enjoy them. That's the big thing we talk about here at Mission Bridge Wealth is that this money and the fortunes that have been built over the last few years, it really should be sweep some profit and enjoy it. Spend that money. Every conversation we're having with clients right now, especially a few of them last week, their mind shift has been about accumulation. Even though they're retired and have been for 10 years, it's still, are we in solid enough footing? Can we draw income? And now they're feeling comfortable where we're actually starting to see them take their money and spend it. And that's a lot easier to do, of course, when the markets are, consistently hitting all-time highs. We're not going to judge that. Our job is to say, hey, it's hitting all-time highs. Let's grab some of that cash, spend it, gift it, be generous with charity, be generous with your family, take the trip you've always wanted to take. This provides a huge opportunity for clients to start enjoying their money. And like I said, scrape some profits and set it aside for the next 12 months in case things don't work out the way we expect or the way we hope.
Yeah.
That way everybody's taken care of either way.
Yeah, that's a really good point. And I think in client conversations in the recent past, prior to the election, we were given the same advice, but maybe for a slightly different reason, right? I mean, you have to acknowledge that the market has seemed a little rich. It hasn't seemed cheap. Say that, right? It hasn't seemed cheap, at least. And in addition to the overriding themes of, hey, you've earned this, you've been good stewards of this, now go enjoy yourselves. There was also kind of the backdrop of also, we don't exactly know where the market's going to go. Nobody does. And, it seems a little expensive. So go spend some, right? And it won't be the worst time to be out of the market necessarily. But now you look at it and that rationale for it is probably not there, I would say, in the near future. Probably maybe that's going to be a hurdle we'll have to overcome in convincing clients to go enjoy the fruits of their labors as the market very possibly continues to go up and they're missing out on that. But again, what's it there for? Why are you growing it if you're not going to do anything with it? Right?
Yeah. Well, in this market, when they're hitting all-time highs like this, opens the door for different conversations with clients too, because there are products that we know and understand that you can pivot from whatever 70-30 equity-driven portfolio, catch it at market highs, move to a portfolio that's still equity or index based, but gives you some level of buffer on the downside, right? In case the market does retrace 10 or 15%, which would probably be a healthy reset for the market at this point.
Yeah.
Protect you from some level of the downside and still participate in the upside.
Yeah.
Or products that give you zero downside,
Right.
and capped upside, but a lot of clients are okay with that. And so this becomes an opportunity to have a conversation with them about, okay, this plan has worked up to this date. You're 5 years older than when we put all these investments in place. We've modified them throughout, that period of time. Is it time to really sit down and completely reassess the way your finances are organized for the next, for sure, 12 months, 18 months, but 4 or 5 years based on what we think could happen.
Yeah. Yeah.
People are not generally aware of all the products that are available to them. They think it's, stocks, bonds, mutual funds. But there's a lot of different things, buffered ETFs, direct indexing, things that we've discussed in the past that could be very helpful for people right now.
Yeah. I think a really important thing in that regard is this idea of goals-based financial planning, right? Where you figure out, first of all, where are we trying to go? What are we trying to achieve? How do we help you live your life of greatest significance, right? And then you work backwards from there, right to left thinking, as Jim McNerney used to call it at 3M, but right to left thinking. And that might lead you to conclude that, we don't need to chase, performance equivalent to the market or greater, right? For someone's situation. Let us put you in something that will still allow you to participate, maybe not as fully on the upside, but will, prevent you from that downside possibility or mitigate your downside risk, right? If that's all you need to get to where you're going, that's the right plan, right?
Don't overreach.
Right, don't take unnecessary risk, right? Nope. How do you define unnecessary risk? More than you need to accomplish what you've told us that you want to accomplish.